Hi there. StoneCo is getting cheaper and cheaper. As you can see, the stock price went up quite a lot, 70% in just a few months, from October 2023 to January 2024. But then the stock price has started to decline, a decline of over 34%, especially in the last month, a decline over or almost 30%. And that happened because they reported the results for the first quarter, Q1 2024. And as you can see, the total payment volume has decreased quarter over quarter by about 5.6%. Year over year, it has increased by 17.9%, almost 18%. And so their earnings, as you can see here, quarter over quarter, they have declined by over 43%. As the market was expecting that this company will continue to grow a lot, their growth rate to be higher than 10% a year, investors thought that the stock price would go higher and higher. But because the growth rate of StoneCo wasn't that high, as the market expected, the stock price has declined. But this is an opportunity for you. Because as you can see, right now, the stock price is about $11. Don't look at this number from Google Finance. Look at Yahoo Finance. The market cap is about 3.6 billion and the PE ratio is about 12. So, as the market cap is about 3.6 billion, this means an opportunity for you to take advantage of this decline. Because if you look at the numbers, you see total payment volume quarter over quarter, from the last quarter, Q4 2023, it has declined by 5.6%. But year over year, the performance was quite great, an increase over 17.9%. And this is great. Now, we may also look at key accounts. You see this decline, quarter over 17.8%, and year over year, a decline over 15%. And this is quite bad. And that's why the market reacted. You saw that decline in the stock price. Now, you don't have to focus on their key accounts. What's important is the total payment volume. This is the most important thing you have to focus on. Because based on this total payment volume, they charge a take rate, as you can see here, which is about 2%, 2.5, 2.4, or 2.3. This is the most important. Especially if you look at the take rate, you can see that they have a higher take rate for medium and small businesses, over 2%, and for the key accounts is about 1%, 1.2%. So, even though their key accounts went down, that isn't a big problem, because the take rate for key accounts is about 1.2%, and for medium and small businesses is over 2.5%. But as I said, don't focus on their key accounts. Focus on the total payment volume. This is the most important. And the take rate. As long as they maintain this take rate about 2.5% or 1.2%, it doesn't matter if the number of key accounts goes down. What's important is the total payment volume. This is the most important indicator. And of course, the take rate. If they can maintain this take rate about 2.5%, this company will do well in the future. But of course, for the other segment, banking, the active banking client base, this indicator is quite important. As you can see, quarter over quarter, it has increased by 14% and year over year by almost 90%. This is quite important because the more users they have, the better the banking services will do in the future. So, for this segment, the number of accounts is important. But for payments, it doesn't matter, because you may have a client, a retailer, a large retailer, and a client which has a small retailer. And if you lose that small retailer, it doesn't matter if you see a decline of 50% in their accounts, key accounts. What matters is the total payment volume. It's better to have 10 large retailers than to have 20 small retailers with half of the total payment volume. So that's the key. That's why I'm saying that the key accounts, this indicator, doesn't matter that much. the total payment volume is the most important. And of course, the last segment, credit, you can also look at credit clients. They have over 18,000. I'm not sure if you can rely on this indicator that much, because the most important thing here is how they handle the risk. They also tried in the past to offer credit services, but they failed. They had a big loss. But now they're trying again. And maybe they will succeed to lower the risk and make a profit with this segment, credit. So if you are invested in StoneCo, don't be disappointed, especially if you bought when I made a video in the past when I said that this company is quite cheap, below $10 or $9. If you bought around that point of about $10 or less than that, let's say $7, you'll do great in the future. The stock price is likely to double from that level. It's already up 50%. So from the current level of $11, the stock price can still go up. Because even though they reported this decline in the total payment volume making accounts, and also in their earnings, as you can see quarter over quarter, a decline of 43%, StoneCo is still doing great. Because if you look at the total revenue, you can see that year over year, the revenue has increased by 13%. Only quarter over quarter has declined by 5% due to seasonality. That's why the revenue has decreased a little compared to the last quarter of Q4 2023. Now, you can trust the management that decline happened because of seasonality, or you can look at the past and see if that happened again. So, let's look at the past. Q1 2023. As you can see here, the revenue last year in Q1 2023 compared to Q4 2022 wasn't that great. Total revenue and income quarter over quarter increased only by 0.2%. So from Q4 2022 to Q1 2023, it has increased by only 0.2%. And year over year, the revenue has increased by 41%. So as you can see, the first quarter of every year is not that great. The growth rate is flat and sometimes goes down, as it happened in Q1 2024, a decline of 14%. Now, this is just a different way to look at their numbers and understand better why that happened, why that decline happened, because of seasonality. And if you look at the past for the second quarter, you can see here, Q2 2023, you can see an increase over 9% quarter over quarter from Q1 2023 to Q2 2023. And year over year, an increase over 42%. So it's likely that, of course, based on this analogy, that the next quarter, Q2 2024, StoneCo will report a higher revenue and also a higher profit. And if that happens, the stock price from the current level of $11, it may rebound back to $16. And what's great about this company is that they maintained their guidance. Let me show you. Here, their outlook. They still expect the total payment volume from 2024 to 2027 to grow by 13%, and clients' deposits by over 26%, credit portfolio by 90%, and adjusted net income to grow by 31%. And this is quite amazing. Be aware that this growth rate is compound annual growth rate. So if they can do that, that will be great. So they still maintain that guidance, that outlook. And this is great because if you buy this company right now at this level of 3.6 billion, you will get a nice return. If you are more conservative, your return might be about 10% a year. Now, if you want a higher return than 10% and you want to have a margin of safety, then StoneCo is a great buy when the market cap is below 3 billion. If you can buy this company below that level, you are likely to make money with StoneCo with low risk. But also be aware of the competition and other risks. Be aware that this company is from Brazil. Other problems may arise, and so on. That's why you have to balance your investments. Besides this, if you look at their balance sheet, you can see that they have some cash of about 5.4 billion reais, but they also have some debt. You can see borrowings 1.6 billion and long-term borrowings 3.7 billion. So when you add them up, add all their debt and subtract from their cash, you'll be left with a small amount. So you can rely on their balance sheet. If you invest in this company, you believe that their earnings will grow more in the future. They're able to make over 60 million per quarter, in total over 200 million per year. And if they can do that and increase their earnings year by year, let's say by 10%, then the current level, your return might be about 10%. If you are pleased with their return, you can take advantage. If you are more, then wait for another decline in the stock price. So, as I said, if you are investing in this company right now, don't be disappointed. Next quarter, it's likely that the revenue and earnings will increase even more. They will report better numbers than Q1 2024. That's likely to happen because, as they said, their decline quarter over quarter of 5% happened because of seasonality in the total payment volume. So next quarter, you might see an increase over 10% in the total payment volume quarter over quarter. That might happen. So if you have other questions about this company, then let me know in the comments.